Mm. That's a lot of volume. 4,000 first 10 seconds. Well, good morning, Richard. Yep, first half hour. Yes, first half hour. At least this open is better than Monday's. That was horrible. Let's see if we'll get some movement in the other direction. Hello this morning. Climbing back. All right, so let's see for the stuff we're tracking mainly. So just following ES signals from last Friday or up until last Friday, 39 weeks. So ES one contract is plus $4,362.50 for the half hour, 88% win rate. So 115 wins, 15 losses. And then for the triple G, not as long of tracking, only 9 weeks. Some of these trades do overlap to where you get some signals out of them. So it's plus 1,800, $12.50, 41 wins, 8 losses. So I was talking on a previous recording how I could see the background color change, not having as high as a win rate, but your average loss is probably going to be smaller because if you're getting in, at the background change, the profit wave is going to be closer. So even though our max loss is set pretty far, but if we close it according to the rules, the average loss should be smaller versus, you take the signal, it's way over here, the profit wave is just, like twice as far. Let's see, so then RTY, those signals have 31 weeks. So that would be after this trade session. So at top of the hour, if one were to switch to RTY, that is plus $3,830, going for 14 ticks on that one. So a $70 profit target versus 100. 150 wins, 31 losses. Let's see, I think the only caveat to that is if there's news at top of the hour, like today, there is some news, you wouldn't take that candle if a signal came on that exact candle. If it came 2 minutes after, then that's what you'd be looking for. Then the triple G, again, only got 2 weeks of that. At 6-0. So of course it's not going to be 100% win rate. It just started looking at it at a good time. That's plus $420. And then I do track YM, which seems to be crappy. Doesn't really seem to be a good time frame to trade it. No kind of market expansion momentum in that one generally. NQ, the one Justin prefers trading and what this was more designed for. It looks like his trade time, he waits like an hour after market open. So if you wait, Chicago time, that'd be 9:30. Um, those ones do total up pretty well. I think it was like $10,000. Has like 39 weeks. All right, so what I'd be looking for, it hammers down, turns a candle red, it should reset for a potential buy signal, or just continue back in that direction. Turn the background red, and then eventually lead to a sell signal. Right now we're just in a waiting pattern. And for those who are doing the stack DMA, this signal came too early for me. But you take the signal, stack DMA is green, and you're still holding. Kind of like you don't have a specific profit target, or maybe if you're doing multiple contracts in your order, you could have, if your stop it's down here, 89, like a 3-point estimated loss. Let's say if you're doing 2 contracts, first one closes at 6-point profit target, and you can just use the last one to maybe just trail it and let the other one ride. That way you've locked in a break even at least with that first contract. But I don't prefer that trading style. And then you would close out your final contract, and those dots go from green to gray or red. it's kind of like the more variables you add to something like that, it just would be hard. I mean, you couldn't really, like, how would you back test, forward test it? You know, it's not like standardized rules. So for a while, it could be doing very well, and then it could switch. You could just be doing horrible, like breaking even, losing money for, you know, month, 2 months or more. So the ATM is set 8 ticks take profit, 40 ticks maximum loss. However, if you watched like the video on Monday, you saw that I closed them out when they went against the profit wave, so the losses were not 40 ticks. That's just the maximum loss I'm willing to take. Go into here. Okay, you know, just let's see if it has it in here. I already had it in here. These are, you know, those are the rules for frequently asked questions. There you go. Number 5, profit targets. On the 1 minute, 4 ticks, 2 minute, 8 ticks. I'm never on the 1 minute on ES. NQ 1 minute, 20 ticks, and 40 ticks on the 2 minute. He only has kind of guidelines for these two markets. All of the markets, it's up to you to figure out. I came up with 14 ticks for RTY and 20 for YM from another indicator package I was using from Apex. It would calculate based upon volatility, like kind of how much the market expansion would be. So like you're trading with, instead of time-based bars, tick-based bars. And so that would frequently show like the bar would need to be 14 ticks and YM was frequently 20 ticks. And then coincidentally, ES was frequently 8 ticks and NQ was 40 ticks. Those are the most common amount of ticks each one was at under normal market conditions. And volatility wasn't sky high, because then it would dramatically change. I mean, NQ would jump up to like 60 plus ticks, or more, 80 ticks. I mean, ES on that indicator would show even like 16 ticks, so it would double. RTY never really got over 20, and YM had a wide range too. It would go up pretty high. So So I don't know how exactly Justin calculates these. And since we're on time-based bars, he just keeps it the same, no matter what the volatility is. And anyone who's new to this, I would suggest just sticking with the signals. Those are the easiest to follow. You're going to get definitely less trades than doing the background color change along with it. However, I bet you'll have a higher win rate, easier to follow. I have more data backing me up as far as potential profits on it. And the background color change, again, in previous videos, you see like there's a delay and stuff. It will show black, or it'll still be green, even though it hammered down, and then it turns red. Like that happened to me yesterday. So, I mean, it was, I think, like a 5-second delay. Fortunately for me, it did not pull past what the profit target would be, but it did pull back, so I got a better entry price. And I had to just, I just hit a market order to get in. So that one is going to be harder to trade. And that one also it can take it away. Like it can do a background color change on you, and then it pulls back real quick the last couple seconds, and then it's not, what you're intending. But it seems like with the signals, if it seems to have less issues with like the lag or disappearing or reappearing. So for gold, I mean, 10 ticks is probably pretty good. Yeah, that one's tough. Gold and oil, I don't really trade those. But your stop loss, so the stop loss on this, you're probably, again, I mean, so your maximum stop, I think the minimum maximum stop is probably 3 times. So it'd need to be 30 ticks. If that's the minimum maximum loss, like I would probably take, or that's what Justin, when he's showing his ATM, when he's, recording his videos, if he's going for 40 ticks, 120 ticks is his maximum stop, and he's willing to take. But I just settled on 5, just based upon the data pretty well over the past like 8+ months. And at the time, I had Apex evals. So that's kind of like what they wanted to see was, kind of an average of 5 ticks, committed stop, not a mental stop. And I just use that to give me some extra breathing room so I can have a higher win rate. One of the things you can also do, since there's not really any recommendations on gold, you're gonna have to forward test it. Probably stay on just like the 2-minute time frames, and you're just gonna have to forward test it as far as for like the amount of ticks, like whatever signal came, how many ticks of profit did it go? And you don't have to get exact. Like obviously this one, yes. I mean it's blown way past. It's like profit target. So you wouldn't have to necessarily put that. But you just want to like see like, oh, okay, like 90% of the time for the ones that, would have been winner, if you went for 10 ticks and stuff, did they win 90% of the time? kind of a thing. So I mean, I think it's at least 80%, depending on what the average loss is, 80 to 85% minimum win rate that you would have to have in order to make this worth it. Because a double average loss is not, I don't think that's going to cut it. So if you're going 2.5 times to 3 times, um, that's it just seems like that's what you're probably going to have to do. Um, see, what was another point I kind of wanted? Yeah, I mean, again, kind of reversals, gold, oil, NQ. I think ES can turn against you less because look how many contracts. I mean, this is what the market's saying it's willing to take at this price. This is high. This is a lot of contracts. Everything else, you see like maybe 10 contracts at most. Like it rarely shows anything close to this. Now, other markets, um, like the bond markets, those, yeah, you'll see like it'll say like 1,000. They're willing to take 1,000 at a certain price, but that market really it doesn't move that much. So this is kind of a happy medium to where you get enough movement. They're willing to take a lot, so you don't just get like some random, like, oh, okay, 20-point swing going against you in this. NQ, gold, oil, all of those. Like you can just it can just rip your face off. It can turn against you pretty quick. Um, let's see. So yeah, so another way to kind of do it is keep track of your losses. So if you're like, oh, okay, maybe the minimum should be minimum 8 ticks for gold. So if you're thinking like 8 to 12, 8 to 14 ticks profit target. So all the ones that didn't hit at least 8 ticks, like you would calculate what were those losses. And so, if you have, you keep track, it can be wild, like several months, 3, 6 months, you're gonna have to keep track. And, if you're like, oh, okay, well, the average loss is, you know, 25 ticks when it went against the profit wave. So then, yeah, you could be like, oh, okay, yeah, so, you know, somewhere between 8 and 12 probably should be the profit target. And then so you just kind of have to keep track of it. Maybe reversing here, but it's getting too late. We have one more candle after this. I highly doubt we're gonna get anything. I mean, this news yellow folder, probably nothing the market cares about. Another thing with trading is don't really be attached to any instrument, specifically. I mean, just trade with what works. Wherever you're able to get to work, you know, just trade it. So if it fits kind of your parameters of however your trading style is, and especially if you can see someone else is trading a certain market instrument and it looks like it's working, you can just copy it. If that's the time of day, if it matches up with you. I know some other people, could be around the world, different time zones. They may this time frame may not really work for them. So unfortunately, I don't have any recommendations for that. I don't know what works for the Asia session, London session. I know you got like FDAX, Nikki, and stuff, but I mean, those markets aren't going to be as liquid as these markets. And that's another thing is when you're scalping, you need to trade like the most liquid markets. Right, we're getting nothing. Um, you have tight profit targets, so you can't really absorb slippage. You need to get fills, and like you can't really have too many orders pass you by. So if you're trading, another market that, oh, okay, I'm going to go for 10 ticks profit, you can't really be taking like a 4 tick, gap, like at your worst price fill, and most likely. So, um, and then again, if you're copy trading, you just want to make sure you're getting filled. I mean, the copy trader I use, ETP, they do have a mode where it can just do market orders on your followers. So you can guarantee fills, but then, I mean, there's your slippage right there. Let's see. Then there's another copier, the affordable indicators. That one can do both too. So they're great for what they need to do. But yeah, you just got to trade the most liquid markets when you're scalping. Now, if you're going for huge profit targets, you're holding for, 10, 20, 30 minutes or a day, then yeah, the markets don't need to be as liquid. You trade stuff like orange juice and coffee or, whatever. Bonds are a very liquid market, but you just don't get any movement. So, you do have to hold on those, not really gonna be scalping those. So, uh, the indices, um, as far as like the US indices, gold, oil, I could see those, or even it's not as liquid, probably some more slippage, but gas, like RB, depending what platform you're on, it's RB or RBOB. That one's another one that moves or kind of moves along with oil, but not exactly. So, but yeah, good luck with gold, Richard. Just you can let us know how it works out. All right, guys, that is it. Past our time frame. See you guys on the next one.